Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, you know what, Phil? It's a week after the budget, and you would kind of assume that things would start to be sort of quietening down a bit and sort of getting back to normal. But
I think this
pulling
is
the headlines together for this week's show, I mean, it's absolutely bonkers. There's so much going on, and of course, we're getting all the updates now and all the sort of belated reactions to the budgets, where people have had time to study the minutiae. So we've got a lot to talk about this week, haven't we?
We have, and I think they've got a long tail that this one's
Yes.
got. Sort of there's still lots to unpick, lots of consultations, lots of discussions taking place, and it's certainly central conversation and we'll talk about some of them on today's podcast as well. And it's still going on, but only weeks now till Christmas. I think we can officially say Christmas now. We're in December.
Yep.
It's looking and feeling very Christmassy, although the headlines don't reflect that. Lots going on, isn't there? And we've got a few shout outs as well this week.
We have indeed, starting with Luscombe Motors. We've got an update on, you may recall a couple of weeks ago, we ran a story on Luscombe. I think it was their year ends.
Yes.
And they teased that they were looking at a new franchise to take on. Well, Car Dealer had the exclusive on this. They broke the story during the week. And Luscombe Motors, so best known for Suzuki and MG, will now be representing Omoda and Jaecoo in the new year.
Yeah, I mean, it's great news. So obviously Mitsubishi's not going back in there then.
No.
we talked about.
Speculate on that, didn't we?
We did.
They are still an authorised repairer, I think. But no, they found some showroom space, which apparently they were letting out to, I think it was a Bath.
Yes, I think it is. Yeah, I think I've seen that near them. Yeah, near their site there. So, I mean, great news, great opportunity with them. It sits obviously quite well next to their MG as well. So, what a fantastic opportunity, and it'll be great to see their results next year after trading with that additional brand or two brands with Omoda and Jaecoo. And another, we are a little bit early this week on getting the new car registrations for November, so we'll cover them on next Saturday's podcast alongside the vans and some results from Europe. We're just a little bit early to get them in for this weekend. But Al Clark, friend of the podcast, and alongside with Auto Insight with Tristan there at Auto Insight and Richard Alcock. He sent us a link, and this is something from Ennison Co, isn't it, Curtis, that they're doing a fund opportunity.
Yeah, so Al Clark posted this during the week, and it's all about this. It's called the Bunny Ennis Fund, and Bunny Ennis was the father of Ennis & Co Group's founder, Linda Ennis. And he dedicated pretty much his entire career to the automotive industry while fundraising for fellow Second World War veterans, because I think he was in the RAF.
Yes.
And this legacy is now living on. And in 2025, Jordan Workman became the first award recipient. So this award is £2,500, the Bunny Ennis Fund. And they're offering it to anyone working within the automotive industry.
Yeah, I mean, that's basically what it is. I mean, it's essentially that it is open to anyone working in the automotive or looking for a way to enter the industry.
Yeah.
They're looking for, as Bunny often told Linda, there's no such word as can't. When judging each of the entrants, they'll be looking for someone who shares that same philosophy, someone keen to push boundaries, and they want to know how you can plan to use the grant to help enhance your career. So this is a great opportunity, and the winner will receive a £2,500 grant, a defined professional development programme, and be that training or education to further the winner's career in the automotive and mobility industry. So that's now live. You can enter that, and it's a 20. And the next Bunny Ennis Award will be presenting a special Ennis & Co industry event in 2026. So
Yeah.
thanks for sharing that with us, Al.
Yeah, and they make it clear that the application process is simple. All it requires is thought, ambition, and a clear vision for how the bursary will help the individual grow as a professional in the sector. So what we'll do is we'll put a link to that in our newsletter on Monday. So if you know anyone who would be interested in that, then please share it with them.
And the final shout out is we managed to catch up with Robert Forrester. Now, you may have seen he's been in the media since Rachel Reeves stood up on the podium there to deliver the budget, although I suspect he got some of his notes half an hour earlier from the OBR's leak. But we did manage to catch up with Robert this week.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Next up is an extract from the interview we did during the week with Robert Forrester, CEO of Vertu Motors. We talked to Robert about the budget, the implications for not just the market, but Vertu as a group, as someone who's operating dealerships across the UK, and the sort of impact that it's had. So here's a short extract from the full episode that ran during the week.
I mean, let's start there, Robert, in terms of the budget and the impact you think it will have on your business in many ways, and obviously the wider sector. I mean, there's a lot to digest from the EVD for EVs. The pay per mile for full BEVs, and obviously the plug-in hybrid element of it, and other things in terms of the fuel duty frees and the 5p subsidy. So let's start with that. I mean, what's your view on for your business and probably your view on the wider sector from these?
I actually thought the budget had some quite big positives in it. Clearly, the postponing of any changes on ECOS reflected quite a concerted effort by the government by the industry to make sure the government fully understood the impact. So we were very pleased with that. The fact there were no radical changes to Motability is clearly a big win, given the importance of Motability to the new car market. So I think that was a big win, because that could have gone horribly wrong, I think. But I think, again, the industry did well to explain to the government what was what. So the government clearly listening. In terms of economic growth, I don't think anybody's optimistic at all. Tax clearly up on pretty well everybody. So I think that's going to have an impact in terms of consumer confidence, consumer firepower, and probably same for businesses. So I think that is a bit of a dampener on UK prospects and prospects for the sector. Some people will still do very well. The good operators will still do very well, clearly. In terms of electric vehicles, I think that is the biggest issue that the industry faces. The ZEV mandate has reduced volumes, reduced margin, put the manufacturers under intolerable pressure. The pressure builds, it continues to escalate. I think we've now got a major issue with regard to vans, with the ZEV mandate tightening on vans, as well as we have with cars. I think the pay per mile levy actually is inevitable. Clearly, they've got to find a way of working it. Put that to one side for a minute. Clocking, fascinating, that one. But I actually think it could work to the advantage in the short term of the industry, insofar as liaising with the government in speedy order in 2026 to explain to them the economic realities of what this ZEV mandate is doing to economic growth, to manufacturer production, to investment, to jobs, and getting quite a radical change, which would considerably improve the prospects for the sector, in my view. And I think the Europeans are likely to change their regime, which is already far more liberal than our regime in timing and in fines, and help the manufacturers in Europe to have more chance of actually making the transition. And I think the UK government's going to have to act. So I think that is number one for next year, is for the industry to liaise with the government and to make meaningful, substantial changes to give the industry a platform for 10 years where we end up electric, but we don't suffer massive consequences, negative ones, in the interim.
And I mean, you touched on the ZEV mandate there, but obviously, the immediate announcement was obviously the pay per mile for EVs and the reduced rate for plug-in hybrids. As presumably on the assumption that there is still fuel duty being earned from the fuel side, the petrol or diesel side of a hybrid, which I suppose many will question on that one. Do you think it's been introduced too early to the consumer? Bearing in mind, it don't come in until April 2028. And do you think the transition to EV is strong enough for this not to have an immediate impact?
I'll deal with the second one first. No, I think that this undoubtedly slows down the transition to electric vehicle powertrains, and the OBR have said that. The OBR have said that they expected the levy to result in a 440,000 reduction in electric vehicle sales in the past period. So that's fairly definitive. Let's just go with their number. If the government is going to have an accelerated timetable of electric vehicle adoption, which is their stated policy backed up by the pernicious ZEV mandate, government revenues, given there will be a decline in significant decline in fuel duty collected. So unless you in fairness, they've given a few years' notice. Policy, I just think. Now, you've got other issues with it, haven't you? Clocking and
yes,
how on earth you measure it and all that good stuff we could debate a long time. But actually, forget all the debate on that. The impact it makes the ZEV mandate worse. It makes it harder for the manufacturers to hit the numbers, to avoid the fines, and that is not very good for the economy, and it's certainly not very good for manufacturers, and it is not very good for retail.
Well, I mean, as always with Robert, we get 20, 30 minutes of his time, and we've always got a lot to talk about with Robert, but even more so when the budget and everything going on. But I think clearly with that extract there, it gives you a bit of a tone to the listeners as to why they should listen to the full interview there with Robert. And the ZEV mandate is certainly something that I think Robert is clearly lobbying for the government to review.
Yeah, I mean, that comes over loud and clear over the course of the full interview, his views of the ZEV mandate and the impact, the way it's limiting dealers' ability to do business as well as OEMs. So do check out the full interview, because there's some fascinating comments from Robert in it.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Companies already featured in our series of supplier specials include Prospecting Dynamics, the CRM specialist led by Nancy Rignall, who is working with some of the UK's biggest dealer groups. We've had iVendi, the motor finance tech provider, ETT, who are shaking up AI dealer call handling, and Generational, the EV battery health test provider. So you can find all of these and many more supplier specials in your podcast feed. And if you would like us to profile your business, then just message Philip or myself at motortraderadio@yahoo.com.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from AM, Car Dealer, Motor Trade News, The Telegraph and The Times. Starting with used EV and hybrid stocks hits new high as dealer volumes rise. We have a revised used car forecast from Cox Automotive predicting a steady market for 2026. The FCA is to end its pause on motor finance complaint handling in May 2026. We've, as I mentioned earlier, we've got some follow-ups to the budget, so we'll do a roundup of two or three of the stories that have broken over the course of the week. And we've also got the latest year-end financials from Caffins. And we'll finish off this week with a look at Tesla. There's been some research done on the brand appeal of Tesla and how it compares with some of the emergent Chinese brands. So we'll finish off with that this week.
So heading over to AM Online to begin with, and as Curtis said, this is used EV and hybrid stock hits new high as dealer volumes rise. Now, this is from the latest of the market view report from Motors and Jaecoo, which I know, Curtis, you are involved with there. But this is obviously straight on the back of the budget and looking at some of the analysis in that report.
Yeah, it is. So this is the review of November, and there are some interesting trends here because the analysis shows EVs and hybrids accounted for 18% of dealer stock in November, and that's actually 3 percentage points higher than November last year, and it's above the previous record. So in terms of overall share, hybrids and EVs have accounted for around 17%, just below, just above, pretty much since the beginning of the year, but they're now at 18%, whereas this time last year they were 15%. So it's showing that shift as we're getting more used EVs, more used hybrids coming into the used car market. And within the mix, EV volumes rose 8% month on month, and that's actually up 30% year on year to take an overall share of dealer stock, dealer used car stock, to 7% of all listings on the platform. And looking at hybrids, they grew 3% month on month and 13% year on year to reach an 11% market share. And it's interesting that with the EVs, the growth is that has been identified by Motors and Jaecoo has come from older EVs entering the market. So stock age between 5 and 10 years rose 91% year on year. Yeah, 91%. And that's 18% month on month. So some big movements there, while 2 to 5 year old models increased by 52% year on year and 10% month on month. So what we're seeing is some of those, certainly from the fleet sector, we're seeing those D fleets starting to impact the used car market in a positive way.
Yeah, and as we said, this is straight on the back of the budget announcement on the pence per mile, which Lucy Tugby, who's the marketing director at Motors and Jaecoo, touched on, saying that our market view analysis reflects the increasing confidence dealers having in stocking EVs as more units enter the used car market. In addition, the softening on EV prices, now tracking at 9% below than 12 months ago, make them more affordable to a growing number of buyers considering making the switch. However, over the coming months, we will see whether the budget's announcement of the pay per mile fuel duty on EVs as of April 2028 will dampen some of that enthusiasm. So I think it's clearly there from Lucy. We're not quite sure how the consumer market is going to react and how the dealers in stocking these EVs and hybrid vehicles are going to react on the back of that pence per mile or pay per mile that's under consultation at the minute on the back of the budget. So one that we'll be watching and monitoring as we start to see that analysis over the coming months.
Yeah, and there's plenty more data and trends within the market review report as covered by Motor Trade News. But what we'll do is we'll put a link in the newsletter on Monday for that story, and also to the full market review that has been published by Motors and Gazoo.
And going over to Motor Trade News, and this is a story on the back from the analysis from myself at Cox Automotive. Self shout out there. So looking at the forecast for 2026, so we're kind of there and thereabouts now in sort of 2025. Start to think about what does the new and used car market look like for 2026, particularly on the back. And it's very difficult not to talk about anything in the car sector at the minute without touching on the budget. But what does 2026 look like with some of the changes and potential changes coming into the sector? So that's where we forecast a fairly soft growth, 0.9% increase on where we expect 2025 to finish, and that'll take the market from 7.7 million up to 7.83 million. I think our upside is just above that 8 million. So if we get the wind behind us and we get through some of the challenges in 2026, we could break the 8 million mark. But I think we just might be a little bit shy on that yet with things we are still facing, both in the economic climate and the supply climate, and challenges around used EVs is what we're trying to cite in this report.
Yeah, it's interesting, isn't it? It's nudging ever closer to the 8 million market that we used to take for granted back in the day, didn't we?
I think that's it. We are an 8 million used car market. We're a 2 million new car market. That's natural for the UK. I think one thing that is coming out on a lot of conversations at the minute, particularly within the dealer network, is about profit margins and profit retention on used cars, because there's a lot of push in the new car market by some brands, not all, but clearly as we sort of move forward in 2026, I think the key thing is vital stock management and getting those margin retentions and making money out of these used cars in 2026.
Yeah, and I don't think it's covered in this particular story, but how's your new forecast looking for 2026?
Yeah, we'll sneak just above that 2 million. We wait to see what the November and December, but the low volume months anyway in general. So we're there and thereabouts with the 2 million. So about 97-98% accurate on the initial forecast. So I think it is where it's going to be now. I think clearly it's more now what does 2026 look like with changes around the mobility scheme and other things taking place in the marketplace.
So heading over to AM Online for the next story, and the headline is FCA to end pause on motor finance complaint handling in May 2026. So this is a story that's been rumbling on for a little while, but this is the latest updates that we heard on Wednesday during the week. And so the FCA will lift the pause on handling complaints on 31st of May next year, which it said will give it enough time to finalise any compensation scheme and for firms to actually prepare for it as well. And the end of the pause is slightly earlier than was initially planned, because that was going to be at the end of July next year. However, the FCA said the new date reflects its commitment to fair, timely outcomes. What did you make of this one?
Yeah, I think it's probably the right decision. I think at the minute, there's a lot going on for the sector that's trying to get their head around, and I think anything that gives a bit of a bit of breathing space and a bit of time to make things, then I think that's a good decision in all in all from my point of view. I think it's a good decision. I don't know. It feels right, doesn't it, that they should do it?
Yeah, definitely, and that consultation on the compensation scheme um, is, as you say, running, and that's due to be completed on 12th of December. So hopefully we'll know a little bit more about that over the coming week or so.
And so now we'll head over to what's been happening on the back of the budget. And the first story we will turn over to Motor Trade News, saying that half of buyers less likely to consider EVs after budget. And this is Motors there saying that amongst existing EV owners, 66% that the pay per mile scheme has made them less likely to purchase an EV as their next car. And again, I know you've been involved with this in terms of this research, but this is fascinating that it's happened so quickly as that knee-jerk reaction from the market.
Yeah, so this research it was done immediately after the budget. It was in a 24-hour period after the budget announcements, and it was of 1,000 car buying decision makers. And there are some revealing findings in this. And as you say, this is the sort of initial reaction. Those reactions may change over time, but Motors found that more than half of buyers are less likely to consider an EV following the announcement of this pay per mile EV tax in the budget. And the scheme, which doesn't come in, and we must keep reminding ourselves, it doesn't actually come in until April 2028, but it will see EV drivers charge 3 pence per mile in order to make up for the shortfall in fuel duty that we've spoken about. But as you said, among existing EV owners, 66% said the pay per mile scheme had made them less likely to purchase an EV for their next car, and that's pretty damning. And that'll be interesting to monitor over time, with 28% of those surveys saying they are less confident as buyers than they were prior to the budget. And confidence was lowest among buyers aged 45 to 64. That's our age group, Phil.
Yes.
While confidence was highest among those aged 23 to 34. And new car buyers were less affected by the budget, with 49% saying they will not delay their next purchase, compared to 34% of used car buyers who said they would.
Yeah, I mean, this is the thing now, isn't it? I mean, it's obviously under consultation at the minute in the sector to try and navigate, you know, how is it going to be managed with this and maintained is probably one of the big questions. There's a lot of analysis of comparing, EV and plug-in hybrid. That obviously the plug-in hybrid gets a 1.5 pence per mile charge, in addition to obviously the fuel duty they pay at the pump on the hybrids for the diesel or petrol element of that hybrid technology. But there's a lot of analysis now taking place as to what it's actually going to cost the general driver, whether it's the right thing to do. But again, it's the clarity and understanding of this. And I think, a lot of this is the unknown, isn't it, that is playing into the consumer's attitude now. I think we all knew tax was going to come on EVs because the government has been losing so much revenue through the loss of fuel duty. But is this the right scheme? Is the big question. I think you touched on it earlier, that in other markets it's proven not to work and have an impact on the adoption of vehicles. So, yeah, there's a lot to play with in this one, isn't there?
There is indeed, yeah. And as part of the follow-up stories on the back of the budget, if we head over to the Telegraph and talk about unintended consequences, the headline there is EV tax to drive up price of new petrol cars. Now, this story looks at how the new taxation on EVs is poised to push up the price of petrol and diesel cars as a result of manufacturers rationing them in order to meet their net zero targets. So, as I say, this is very much unintended consequences, because some people in the industry feel that fewer people were likely to buy an electric vehicle as a result of the new taxation, creating problems for the car industry, which is required to sell more of them in order to hit their ZEV mandate targets. And as a result, car makers, according to this story, are expected to put up the prices of petrol and diesel models and limit their sales in order to nudge buyers towards purchasing an electric vehicle instead. So, you couldn't make this up, could you?
You couldn't at all, and we've heard before. I mean, obviously, it's quite a big lift as we go into 2026, and at the minute, the ZEV mandate isn't expected to have any revised or review until 2027. The sector is trying to get the government to review the ZEV mandate thresholds earlier because of the, as you say, unintended consequences of this significant lift next year for particularly cars. I mean, the vans is just way out from being able to achieve the LCV target, but for cars, it's quite a big shift, and that's where this is now starting to play into it. And as we said before, we did have a catch up this week with Robert, and he's quoted in this story saying that before the budget, the industry was already facing a very significant challenge to hit the ZEV net zero emission target, the mandate targets. So the problem all along has been that you get into the rationing of a situation, and in the rationing situation, petrol and diesel car prices go up, and they have to. And saying that obviously it's this is the concern that the market's looking at. So really very pointing that out to the sector of what the consequences of this could be to the market.
Yeah, and Robert's comments were very much echoed by the Institute of Fiscal Studies, because Isaac Delestre at the IFS said, what this all means is the share of electric cars sold as a share of total cars can't fall. So what that means then is that insofar as this policy does reduce demand for electric cars, the market will have to adjust in order to keep those share of electric cars sold constant. So pretty counterintuitively, you could see a tax on electric cars, which ultimately will end up increasing the price of petrol and diesel vehicles. So it's just madness, isn't it?
It is. I mean, yeah, this has got a lot more to come. So sticking with that, and sticking with this pence per mile, or as it's titled in the Times there, that hybrid drivers face double tax whammy with 1.5 pence a mile levy. Now, obviously, this is again on the back of this planned pay per mile. It's and the EVED being announced that as of again, and as Kirsty said, this is 2028 we're talking about here. April 2028 is the plan rollout of this, but it's obviously going to hit the hybrid, the plug-in hybrid drivers within the sector. That there's questions of how much they do use the EV element of their vehicle. I can only speak for myself there, Curtis.
I think you let that slip, Phil.
As how this is going to be managed, because obviously the plug-in hybrid driver, as I said earlier, is paying fuel duty on their petrol or diesel element of their mileage, but obviously now there's a charge coming in for the EV element of their vehicle, and the question is how are they going to monitor? There's one thing monitoring an EV, because you get the total mileage on an EV, you know exactly what mileage is being done on an EV. I'm not sure at this point on some of the vehicles of how much you can monitor the mileage on the hybrid element, EV element, and the ICE element of a hybrid. So this is going to be interesting.
It's going to be a flat rate, whether or not you're using electric power as part of your hybrid or not. And Edmund King, president of the AA, makes an interesting comment. And again, going back to that time lag, they've pre-announced something that's going to happen in 3 years' time, because he says they are not talking about introducing it until 2028. So why are we talking about it now? They could easily have waited another 12 months before raising it, so there's no premature damage to uptake. And I think that's an interesting point, isn't it? Because um, the one thing that we know for sure about consumers is they hate uncertainty. And if there's uncertainty in the market, if there's a looming tax, they won't be factoring in necessarily that it's 3 years off. They'll think, oh, well, I'm not going to buy a plug-in hybrid. It's going to cost me more. And they will look at something else. And possibly going back to the petrol and diesels we were just talking about and trying to get in there before the prices go up.
I mean, that's the thing, isn't it? You know, I get what they're trying to do, but as you say, it's created. It's the wrong time. I think the BVLA are very clear. This is the wrong time to introduce this. You know, we've had a bit of plateauing of EV transition over the last sort of 12 months. There's a lot of financial pressure. There's lots of conversations around the use of EVs. Hybrid is becoming a good stepping stone for a lot of consumers. We know that, where that's the BYDs, the Jaecoo Omodas and others, the hybrid technology that they've got in their vehicles now is creating that significant stepping stone for consumers to really get behind driving the vehicles, mainly on the EV part, and then using the hybrid as the secondary fuel as the backup rather than the other way around. So there's a lot going on here. And just to add to this story, that analysis by New Automotive, which is a research group, found that the launch of similar taxes in Iceland and New Zealand, and New Zealand's the one that does get quoted quite a bit, led to severe and immediate collapse in the market share for electric vehicles. In Iceland, a 5 pence a mile tax and the withdrawal of a subsidy for EVs at the start of last year resulted in a fall in market share from about 40% in 2023 to 13% in 2024. Subsequently, in New Zealand, who imposed a 2 pence a mile tax and withdrew their subsidy for early last year, and the market share for EVs fell from 18% to 6%. So obviously there's a lot being cited that New Zealand have got a pay per mile policy. This kind of disproves that it's actually working. So
yeah, exactly. Yeah,
begs the question on that one, doesn't it?
The writing's on the wall, isn't it?
It does seem to be. It does seem to be. But we'll be back with the rest of this week's headlines after this very short break.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are on your podcast feed.
So heading over to Car Dealer, a couple of quick stories here that Zipcar to pull out of the UK after car sharing model fails to catch on among British drivers, saying that Zipcar plans to shut down the UK operations by the end of this year. The firm said its customers would still be able to use Zipcar over Christmas until December the 31st, and the US-owned outlet has racked up millions of pounds of losses. So I think it's not great news, but probably maybe not a big surprise, Curtis.
No, and Zipcar we know is owned by Avis Budget, and I think over sort of recent months, if not the last year or so, the focus has sort of shifted towards London. So as a business, it was getting smaller, and clearly the numbers weren't stacking up, hence its withdrawal. And the whole car sharing concept in the UK, in my mind, it only ever had very limited demand. And I think this is reflected in the decision to pull the plug at the end of the year.
Yeah, and as you say there, I mean the accounts showed that the van and car firm saw losses deepen to 5.7 million in 2024 after a decrease in customer trips. And Zipcar currently has 650,000 members in the UK, all of whom can rent cars by the hour or for a day using the company's app. So again, I mean, bigger scheme of things, 650,000 vehicles or 650,000 customers isn't in the scheme of things isn't that big, is it? I suppose in many ways.
It's not, and in terms of the volumes of cars that Zip Cars was acquiring, it's probably not going to make a huge difference to the UK market, is it?
It's not. It's not. So again, it's a shame because it's a business a model that's leaving the UK, and obviously car sharing was not so long back the buzzword of the future of mobility for automotive, but it seems to be a little bit on the back burner, maybe for other reasons that everybody's focused on at the minute. But we head over to AM Online, and this is that Jamil outlines plans for Farizon van network growth, and just looking at some of the videos and images on this vehicle, it looks great, and I do wish them the best because they've got some big plans for it.
Yeah, definitely. And you've got the pronunciation right, because at AM Live they were exhibiting, and I did check out how it was pronounced, and it's Farizon, as in horizon. So this is the new Chinese light van manufacturer that's coming to the UK, that's being distributed by Jamil, who also are bringing in Ion, who we spoke to just last month. So the new Chinese car brand. So both being distributed by Jamil. So it's showing, firstly, how big Jamil is suddenly becoming, and secondly, this intent to roll out a dedicated van network, and Jamil are actively looking for dealers now.
Yeah, I mean, Jamil is a huge operation globally, and Jasmine Wong, who's the chief executive of Jamil Motors, which has vehicle distribution operations in 10 countries. So bringing Verizon into the UK is a huge opportunity as the country continues on its pursuit of a net emissions transport. We are at the right time, because I will say that 10 years ago, the Chinese product wasn't as exciting as it is right now. So we enter this era, and we're very excited about the advancement in the technology. So, I mean, wish them all the best with it, because I think this is really maybe it's a fresh that the LCV sector needs at the minute, isn't it? Probably.
Yeah, definitely. And there's no figures attached to this in terms of how many dealers they're looking for. But Callum James, who's the general manager of Farizon UK, said the business is keen to attract franchise dealers who already have experience of retailing vans and trucks. So I should imagine that there's going to be a number of possibly Ford and certainly Volkswagen dealers who might be interested in this as an additional franchise.
Very much so. And just a very quick financial update in car dealer, and this is dealer group Caffin slumps to pre-tax loss after a particularly challenging period for the retailer, saying that the dealer group racks up a pre-tax loss of 934,000. Bosses react with the operational changes, including the closure of a Lotus site. Now, this is one of the 3 remaining listed motor retailers on the UK stock market, isn't it? And this is a family-run business.
It is, yeah. So that's along with, from memory, Vertu Motors and Motorpoint. They're the only other 2 listed businesses, aren't they? So as you say, this is a loss before tax of £934,000 in the 6 months to the end of September. And the figure represents a major decline on the same period last year, when the group made a pre-tax profit of £213,000. And the car dealer report goes on to say the documents also show a 2.7% decline in revenue, with turnover for the period dropping from 137 million to 133 million, with bosses at the group saying the firm has responded to the slump by making a number of operational changes, which they now hope will help steer the company back in the right direction.
Yeah, and finally, and I know you quite like this story because it's some new research that we've not really seen before, and this is on AM Online, saying Tesla brand appeal weakens as interest in Chinese brands grow. And this is obviously a big conversation at the minute as to where Tesla sits now, as we start to see the growth, not just in the UK, but other markets of a lot of these Chinese new entrants. We've got 71 manufacturers now in the UK, Curtis, compared to 41 that we had in 2019. That gives you a bit of perspective on this, doesn't it?
Exactly. Yeah.
But
It's fascinating, isn't it? Because Tesla was very much the disruptor when it arrived on these shores, and was the disruptor for many years. But now it's being disrupted by the Chinese brands.
yes, yeah, and this is research from Escalence. Hopefully, I've pronounced that correctly. This is their 2025 EV Forward research, saying that the Tesla brand sentiment study shows sentiment towards Tesla is now more negative than positive, saying that the study reports that 38% of new car buyers believe that the brand's novelty has worn off, and 44% disagree that seeing more Teslas on the road makes them more likely to buy one. So this is it's not great news, is it?
No, and that was very much part of the early attraction for Tesla, because they were unusual. They did stand out, but as we've already said, that there are now so many alternatives, and Teslas are quite sort of common to see on the roads, in terms of their volumes. So while Tesla continues to lead on charging infrastructure and charging speed, this report goes on to say that it trails rivals in terms of design, quality, and emotional appeal. And I'd agree on all three counts there, because having driven a Tesla, I enjoyed the experience, but the interior is very sort of, it's kind of very dated. It's quite sort of basic, whereas some of the Chinese brands that have launched over here, the interiors they've given a lot of thought to. So they've got the tech like the Teslas have, but it's a better environment to actually be in and to drive from.
Yeah, and just a couple of other stats from the report, saying that consideration to buy a Chinese car. It's interesting, Chinese car. That's a one to debate, isn't it, of where cars are actually manufactured. Has risen from 31% to 47% year on year. And the largest increase was in any country of origin. And trust in Chinese brands has also improved, rising from 22% up to 28%, saying that the BYD ranks 8th overall amongst brands reviewed as moving into a positive direction behind established names such as Audi, BMW, Mercedes, and Toyota. So, yeah, I mean, Tesla sits, to put that in context, Tesla sits at 50th place.
Yes,
Against BYD in 8th.
Yeah, exactly. So some fascinating research here, and we'll have a link to this, because there's much more detail within the story, but we'll have a link in the newsletter that goes out on Monday morning.
But that's it. So hopefully we've managed to touch on everything that's going on at the minute. There's still lots to unpick on the budget announcement and what it means to the automotive sector, both in the short, medium, and long term. Don't forget, on your podcast feed, from earlier on in the week, the interview there with Robert Forrester, sharing his direct views of what's been happening on the back of the budget, where he sees the market at the minute. So not one to be missed. And you're not here next week, so you're going to be joining me and David Billsmer.
Yes.
He's joining me on the podcast again. So hopefully we'll have the new car figures and LCV figures by next week, and we'll see what else is happening, the big stories in the media to talk through with David Billsmer.
Yeah, and I'll be listening to the pod from a windswept Cornwall.
You will. Yes, definitely.
But that's all for now. Many thanks for joining us on the Motor Trade Radio podcast. Until next time, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.